Ladies and gentlemen, still Kevin Alpha over here. Now, what was I talking about a pullback? Let me show you this. First of all, this candle went up, push, that's a valid pullback. There, took that. Now, this is a qualified break of structure. What did I tell you? When it takes the last pullback, that's the inducement right there, break of structure. I'm sure there was some order block or sweep of liquidity it used in going down, mitigating something over there, or just probably took the inducement and went with a long wick and then went on the way back up. But then when it gets here, we're gonna have to back new structure, new everything. Look at what I meant by an inducement. Sorry, pullback here. This is not a pullback because first of all, in order for it to be a pullback, it must go back, take the liquidity of the previous candle or you know previous few candles, and it must come back and exceed this high. Is that when the high causes the taking of inducement, when it exceeds the high, it must be with a candle close above the high, and that's a confirmed break of structure. But for a pullback, it must come back to exceed the high that caused the pullback. Note, for a pullback, it didn't take liquidity and whatnot. It just pulled back, took the last candles liquidity, last few candles, push up, and either wick or close above this for a pullback. A wick is okay, a close above is still okay. But then it went down, yes, but did not come to close above this. So let's find out. It kept going low, kept going low, kept going low. This is the lowest it went to before coming to anything above this, right? So, bam, there. That is, see that? That is one single pullback leg. That right there. You see why trading is simple but not easy, because it's very easy to draw diagrams and explain stuff, right? But then when you jump into the live market, you begin to see things that requires your discretion in order to draw. But there are rules still to this thing. You follow the rules plus your discretion, and that's it. That's why I'm telling you these things. Anything you want to learn off of trading, you can learn for free. You don't need to buy courses from these gurus, right? Selling courses, it's not helping anybody. You can go through the course and still not know what to do, right? So that is another valid pullback. Went above that. What's the latest point? Great. So we have that it stayed right there. Ooh, didn't come to exceed that. So not a pullback since it did not come to breach this high again. That high is right there, but it went back down, push up, and did something else. Just crashed all the way down here. Let me show you something. This was the last pullback, right? What did I tell you? Once the last pullback is taken, what did I tell you happens next? The high gets confirmed. So this is the new high. And then we would expect that, okay, since it was in an uptrend recently, from what you could have seen, the going up and all, that we would find some order block to mitigate and push up. Now you would say you just want to find places straight from. No, no, that's not how it works. This is a one single pullback all the way up here, right? So if you were to draw an order flow, it would have been like this, but then I'll show you why this would not be a valid order flow. Bam. That's why. Because the candles came back to mitigate it before it even took the inducement. So this would not be valid. I'll show you what a valid order block would look like. There are no valid order blocks because since inducement was taken here for this particular one, then the candle closed above, giving you a breaker structure right there. It must be with a candle close above, right? It will put a wick, even if it puts a wick the first time, that wick shifts the line that it needs to close above. Next wick shifts the line as well until we have a full body that closes above those long wicks, right? That is a necessity. We cannot overlook that. Okay, so that was the breaker structure right there. Therefore, this would be the change of character, the new change of character. So we'd have tracked it from here. Remember, until either a new high is formed, the low stays valid, which is a chalk, stays valid. So when I saw it come down this way, the first time when I saw it come down, sorry, I don't know, there's this slight echo on the mic. I try to ignore it, but I can always feel like it's a whisper or so, right? But you're saying this would be the chalk. You know what a chalk is already, ladies and gentlemen? A change of character. And that would be the change of character. This would be the high confirmed, the change of character. Now that you know it changed characters. When I first saw it coming down this way, I expected it to put in a wick, sweep the liquidity below here, and then give me a single candle order block and SCOB for me to buy all the way to the top. But that's not what it did. What happened then? It had a successful candle close below. So what happened? It closes below successfully. We have a change of character. We also have a shift in market direction. And we're gonna have to start. Remember, ladies and gentlemen, this is the 15 minutes time frame, and we're gonna have to follow one particular rule I told you. Every single time it changes character, we go to the higher time frame to check where we are, and if we're still. Let me map it out for you. This was the last structure. Came, took it. So we had our confirmed breaker structure right here. This was a breaker structure, confirmed. Since our liquidity, let me show you, came all the way down to that. Candle didn't close above, so still very valid. New liquid point would be here. All these things are, like I said, non manipulated, not the market might be manipulated, we don't know that. But what I'm trying to tell you is that there are base rules for all these things. Now, I could do a video listing out all the rules on why and how you trade. But then when I'm done with it, you're just going to be like, is that it? Is it that simple? Yes, it's that simple. But as you can see, trading is not easy. It is simple to explain. It is not easy because then there are lots of things that cannot be explained, like the way you feel when your money is going down the drain, like the way you feel when it's going the other way. Okay, let me use a path tool for you to get it. So when character was broke, when structure was broken here, continuation for the uptrend, we will start from the change of character to market. Start from the change of character. Went up, valid pullback. See, this is not a pullback because it did not come back to exceed the high that started the push down, right? Push up, did not come back to exceed the high. So this is not a valid pullback. This, on the other hand, is a valid pullback. Closes above, push down again. We see that. That is the pullback. The red candle has got to exceed that green candle before it considered it a pullback. Not a valid pullback. Now it comes back down, takes the previous pullback. Oh, you know what that means. Once the market takes the inducement, the high gets confirmed. That's the first thing that should come to your mind. And then what are we looking for? We're looking for unmitigated POI zones. Unmitigated POI zone. What I mean by unmitigated is that mitigation is when candle comes back to wig into a zone and then goes back out. This would be mitigated because this went out of it and came back. Not even that. I think this went into it as well. So not a very this irrelevant. This is irrelevant because the liquidity is below it. That same liquidity point came back into this particular order flow, so not relevant. Besides, in order to be relevant, it has to have order block and fair value gap inside of it as well. But then there is an order flow significantly enough right around here, and I'm pretty sure I'll look into it right now and give you where the ones are. So let's take that away. Order flow right there. I told you order block needs to exist. Now we'll look to therefore that, ladies and gentlemen, is our order block. Directly above our order block, just a very little one though, but still a fair valued gap. Now, since we have that, you now know what should have happened. It should have gone in here and given you some kind of reaction to trade from. Now, the kind of reaction I want to see, or you want to see, is this. It comes into the POI, bounces in the POI. The candle that went the lowest, the next candle after that closes above it with a body, right? Then we make our entry from the top of the candle that this other candle closed above. That's our single candle order block, placing our stop loss 10 pips. I have a rule. My stop loss cannot go more than 10 pips. I know a lot of people would be like, oh no, you got to give your trade time to breathe. No. No, if it's more than 10 pips, my trade shouldn't be breathing. That's choking. My trade is gone. I want to be out of that trade if it's more than 10 pips. That's all I can. That's my risk management. Okay. That's all I want to lose. My risk management. So tap into that and should be going this other way because I think my strategy is trying to find those tipping points. Those tipping points. The point where it's done going down and wants to go up now. So why would I want to be in the trade more than 10 pips? If it's more than 10 pips, it means it just doesn't want to go down. I mean, there have been times, and there will be times where, of course, it will wig you out before, but that's just the market. Nothing is against you. It doesn't mean you got to change your rules. I can show you 100 times my rules work. I can also show you like 50, 30 times my rules didn't work. It don't mean because of that one time, those times that it didn't work, I'm supposed to shift my stop loss, and then the times where it goes against me massively, it's just gonna keep taking me out and putting me in losses. That's not what I'm gonna do. So as you can see, it had a successful chalk. Now this one was a bit tricky, and I would have fallen for this trick. I promise you. It went below, swept the liquidity below the chalk because there's always liquidity, and pushed up, like pumped up. Let's say the candle that went the lowest gave us a single candle order block. I would have entered the trade right here, waiting for it to just tap and then push, but it went right through. And you see something like this, right? If I was like maybe beyond how many pips, let's put that to the test. The top of the candle, I would have gotten in for 10 pips. I place that there, 10 pips. I target the top because it's always at the to meet the external liquidity. That's where my target would be. Now, okay, see how it fell, right? If my stop loss was beyond 10 pips, imagine the losses it would give me. Now, people would be like, okay, if say I was in the trade, because I don't think I was looking at Aussie dollar at that particular point, it would have still been good. Depends on the way you look at it, though, because I also, starting out in life as a trader, I had a different set of rules, which I feel like is different from what I have now when it comes to taking partials. I was I had this rule that if it's double your risk, once it's double your risk, close partial there. So say my risk is 10 pips, my risk is 10 pips. My first profit target would be 20 pips, like double of my risk. So it would have gone a lot, been this, been that, been that. But then let's see, along the way, I now changed it to something of somewhat of like, fine targets, like highs. It would be a target for me. This also would be a target for me. And then finally to the close at the top, right? But as you can see, it would have given us a certain kind of TP1. Once TP1 would be hit, the first thing you need to do is move your stop loss, break even instantly. Close partial. Now that failed. I'd remove this. Like I said, I will show you in the live market. No guru type shit of Forex replay and blah, blah, blah. It's happening, right? So now, since we know we had a chalk, the very first thing we want to do is begin to max structure for the downside, particular direction, and our bias needs to change, and we need to go down. So we'll start from here. One, ladies and gentlemen, two. Still didn't come to close below this, so you can't count this particular place. Gotta go all the way up, and then it takes the inducement, right? The inducement was collected around here because that's the last pullback, and the market finally returns to take that particular last pullback. The very first thing we want to see is that we map out our inducement point, then we pull our, because it's just happening in the live market, you wouldn't know if this was going to break structure or anything. You don't know anything, and when it changes character, it doesn't mean, oh, instantly magically the market's going to start going this other direction. No, it simply just means there's a potential for a market shift. What guarantees us that it's going this particular direction is if it forms one structure and goes that way. So we're like, oh no, new trend has started, and we hope it continues that trend. That's why we would be banking on sell trades as opposed to buy trades we were banking on before. But when it took that liquidity right here, we're looking for an order flow. To this order flow right here, let me show you, it's worthless because the this order flow right here is worthless because even the liquidity point itself tapped into it. So not useful. The next order flow you'd have would be this particular candles right here. This one long all the way. That's the next order flow you had. And as you can see, the market greatly respected it. Now, like I was telling you in the previous video, you have two POIs, the decisional and the extreme POI. The decisional is the first valid POI after it takes inducement. It took inducement here, you know this is not valid, so this makes it the first valid POI. And then if that POI did not work out, the next POI we would have to be, give me a second, can see from a distance. There is no valid. We have a green there. There are no valid kind of pullback right there. Hold up. Yeah, that's a valid pullback. We got one, got two. So that's the last valid pullback right there. Therefore, making it POI2, right? Decisional, 50-50. Extreme, if it goes beyond the extreme, there's only one last liquidity kind of left. Two, actually. That's why the market cannot be so certain. It's dynamic, does what it wants. There's something called engineering liquidity. That is last pullback, the last pullback in the structure, the engineering liquidity. Then there's also of the change of character before going this particular direction. But as you can see, we did not sweep this high. We respected this, the market actually respected this particular first POI. Let me show you things that should be in a POI. This is a pullback of another flow. Very simple. Went in here, push all the way up. Let me give you with a path two. First pullback. Second pullback. Third pullback. Fourth pullback. Yep. Fourth pullback. Then nothing in between because nothing exceeded this low right now. We got that particular one. But because we're still within a structure of a buy, we'll see this as pulling here. The highest point was there. Then we know we exceeded it to the bottom. Then there was there, right? Then also there. That's not the point. I'm just showing you how to pick pullback, right? But this is a valid pullback. Now, inside the pullback, what you want to see is you want to see locate an order block. It's a candle that took liquidity within this order block, order flow actually, and has a fair value gap right after it. This one stood out, took the liquidity of the previous candle. Liquidity of the previous candle means in a downtrend it swept the high of the previous candle. In an uptrend it swept the low of the previous candle. So this would have been our order block, right? And this would have been our fair value gap. Fair value gap, order block, fair value gap. As you can see, respected both the order flow and the fair value gap. Did not tap into the order block, but that's the market. You can pick one of the three POIs. But like I said, order flow in my previous videos. Actually, order flow is arguably the most important POI because it houses the rest. So now we know that was a breaker structure because candle came back to close below. Now, this is not just for me teaching you what it looks like, how it went through. Let me show you how you would have entered as well. That's one thing I just love doing, showing how you would have entered. Now, you've heard me mention STOB before, right? Clear, super high vision. Now, good. Let's show you how you would have gotten into this trade. Now, you see the candle that went in first, then the candle that went above it, highest. That's what we want to see. We're looking for a candle, the highest candle that went in. If this is a bearish order block, order flow actually. If it were bullish, we're looking for the lowest candle that went in. This one we're looking for the highest candle that went in. So what we want to see is the candle that went in highest. The very next candle has to close, or any candle that's independent of it has to close below it for it to be valid. In an uptrend, it has to close above it for it to be count as a valid, you know, reversal pattern. As a valid single candle order block. Now, this particular red candle is within the wick of this green candle, so this is structurally irrelevant. Next one, sweeps, did not close, did not close. So we have a problem there. But then immediately a candle closes. See, this little red candle exceeds, let's be very sure, I gotta zoom in like I said. It exceeds the high of the previous candle, we mean this green candle. Even if you're not too sure, you can take the green candle as well as uh, your single candle order block. So we have that as our single candle order block right there, right? Single candle order block. What do we want to do? We want to enter directly from the top of the single candle order block the moment it's recognized. So what we would have done is the moment this closed above this, we would have placed our order right here. I work mostly with limit orders. I'm not even gonna lie about that. And then we want to be at exactly 10 pips. Nothing more than 10 pips, ladies and gentlemen. Am I really seeing that 10 pips? Well, that looks like a extra large 10 pips. But you want to be sure. That's why you always keep 10 pips. Nothing more than 10 pips, right? It's always 10 pips. And what's going to be your target? Your target is going to be the breakout structure. That's going to be your target. You're going to target the breakout structure. You can target a little extra below that actually, since it's a downtrend. But I'll show you how to do that a little extra later on. Have you ever heard of the Fibonacci? That's what you use to do that a little extra. It can kind of like, from the calculated numbers show you where it's going to go. But then in this particular trade, we would have been stopped out because, first of all, depending on where you keep your profit targets, right? If you're not one that has profit targets, you would not be stopped out because when you came back and did this, it wouldn't have come and meet you at break even and all that. Well, let's go. See what I mean? Of course, for now, certainly, if you didn't have a profit target before, when you did this and came back and exceeded this previous low it put in while going this way, you would have closed partial here and moved your stop loss to break even. So yeah, we would have all been stopped out of this trade. This particular trade, we would have been stopped out of it. But then opportunities to jump back in also existed because you can always take the wick of this candle as a single candle order block because it went the highest again, swept the, if you want to consider this as an internal, like I told you, there's the external, that's the swing completely. Then there is the internal structure, which this is an internal structure. You can definitely map this as an internal structure. I can show you even how. Its own pullback was from there. Pull. Internal structure, as you can see. Right? Then tip there, went up there, went all the way down here. So the last place it took liquidity, so this one's a little lower than this one, I think. Yeah, would be here. Liquidity taken. comes all the way up, we need to look for a single candle order block. Or we need to look for an order block because the sell, the buy before the sell. Okay, order flow on order block right here. It mitigated it. The candle wick went above the other block. Yes, it did not close with a candle above the other block, so the other block is still very valid. So now we had a single candle order block created because you know the rules. One that taps into the POI and the highest, then the very next candle closes below it. So this would be a single candle order block, which did not get tapped on again. Did not get tapped on again. Let me show you all this. And then this is now a new low within our main low. You get it? That's the internal structure within our main structure, right? So we're not gonna map a low there, but just know a mental low right here. Now, what's the problem? The problem is I was trying to show you why you would have been stopped out at break even. You would never have held that trade. Problem is now we have an internal. This candle exceeded this long candle. If this candle not exceeded all this long candle, everything would have been within this candle's wick high and low, which means all these candles would have been irrelevant, right? But this candle exceeded in taking the liquidity and giving the liquidity to this ones for them to do their thing, right? So that's it. We have this as the order flow and lots of opportunities. So that was the order block, which was duly mitigated. The candle went above it, didn't close above it, formed a single candle order block. Inside of that, you map the single candle order block out. You can always use just the wig alone of a single candle order block. You can always just use the wig alone. Without a candle close above. Like I said, just the wick. Without a candle close above, right? It just swept through the wick and would have given you its own single candle order block. Now, because it's an internal structure, right? When it comes back to tap in here, if you were like you dragged out a single candle order block, you can always just take a direct trade all the way down. The because it's the internal, the POI is not big. Like the point in which it taps is not big at all, right? So this means another trade would have been added to this one because this one would have stopped you out anyways. Let's not just say had. But generally, when it's a swing structure, I always look for single candle order block, and this one would have been much faster. What are we doing? You can scalp just above this and place your stop loss here because A, we're not going to be giving it 10 pips here, but we do have a 10 pip rule for when it comes to an external structure like this one. It must be 10 pips. For me, that's what I do. But this one can be your discretion, right? Because there are times where it would have gone a bit up here and you do not just want to add more losses to this particular loss, right? This one would have been quick, simple, and easy. Let me take this off so you'd see how quick, simple, and easy this one would be. But that's trade within a trade, right? Eventually, it broke our external. It might be structured for that internal like this. Oh, like this. Then and then that inducement taken. Locate the POI. Bounce right in. If you didn't take the wick and you took the full body, it would have tapped you in here. But then come all the way and do this again, right? The beauty is you would have not been stopped out because your stop loss would have been like a lot higher, right? But then that's just it. And then it goes all the way down to do its thing and give you another internal break of structure and eventually breaks the structure in the main structure, right? So you know you have all of that. And it's not just for show. I'm not just typing and taking previous data and doing this. I can literally do this on real time market, ladies and gentlemen. And I will do trades on real time market and show you so you know how important that thing it really is to not just talk the talk but also walk the walk. So since that's gone now, new mapping has to be from here. Did it exceed? What you want to see is if the green candle exceeded this red candle. If it did not exceed all these candles here are therefore irrelevant and therefore should not even be considered a pullback. It did not exceed, so the leg stretches straight all the way down here. in the market. When the moment liquidity is grabbed, the low is confirmed. Once the low is confirmed, what's the first thing we want to do? We want to locate a POI. Then let me show you something. See, low confirmed. The change of character switches to here, the highest point in that particular structure. So as you can see, the market did change character. The market did change character. There was no order block that could hold it. So I mean, the only order block that was valid around here would be this particular candle sweeping everything and all that. Because I think, yeah, that's that particular candle sweeping every those that within its body. It's massive fair value gap right there, massive. It entered, mitigated this, and you begin to think it's gonna give you a single candle order block. Because I told you for a swing, always look for a single candle order block. Since I exceeded this particular low is no longer internal, so look for a single candle order block. And when it mitigates a POI, wait for that. It mitigated the POI. This red candle went the highest. No candle closed below it, so we couldn't take any trade, which would save us a lot. We could not take any trade. Now, all these other candles like this are within the body and wick of this long red candle, so not relevant. The candle that did push below it did not close below it, so we'd always want to wait for a candle that closes below, and then by the time it gets to this point, you're like, okay, okay, finally this one pushes behind, a candle closed there, and you'll be like, okay, let's get ourselves into one or two trades, because rules are rules. Trust me, we don't make them up. Rules are rules. What, did it make it there? Yeah, that's there. So your trade would have been somewhat of this. Targeting here being, oh my god, I got a good risk to reward ratio. Yeah, 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 yeah. And bam, you get stopped out. It still takes out your 10 pips. Ladies and gentlemen, you would have been stopped out of this trade and you would have probably cried. Just kidding. So that would have been a losing trade. The moment character has been changed, what do we want to do? I was on the higher time frame mapping structure for the 4 hours. But that's a good thing because I'm showing you that this can be done on any time frame, right? It's not just magically on the 15 minutes time frame alone and all that. This can be done on any time frame. I completely forgot I was on the 4 hours time frame, right? So when character has been changed, character was changed there. What you want to do is, and a successful candle was given above it, which makes it a valid change of character. You want to map structure for the upside. Now, your path tool, let's get that. You know how this flowed, this flowed, this flowed. What we want to identify is the last pullback. This was a candle when there. This one took the liquidity, so that's a valid pullback. When there, came back, took that liquidity. Therefore, that's where our inducement is at. So once our inducement is spotted, the very first thing we want to do is confirm the low, or in this case, the high. The high gets confirmed right here, and we would not know if we would come to break structure, but of course we'll just like try to follow our rules. Right now, what we want to do after the inducement has been taken is find a suitable order flow to identify our valid order blocks and everything inside of it. This is an order flow, but it's already mitigated. This also is an order flow, but it's also mitigated by this particular momentum. Are we sure? Yes, mitigated by this particular momentum. So although it's a minor mitigation, it's still a mitigation. So what would we do? We would take within this order flow, this candle swept the liquidity of these other candles very well. So we would, again, I'll put out another video showing you why, when, and how to use wicks as your entry point. That's where we would have entered from. Not just placing and targeting. We'd wait for it to tap, give us a single candle order block, which it did at exactly that point. and then we will take our long position trade from that single candle order block right there. Long position from that single candle order block right there. We would naturally adjust it to whatsoever. It's a small one. Place it just below the. I think that's where your discretion comes in. That will allow it as well, because it wouldn't. See, that would be the target. Beautiful thing is, we would have closed and been stopped out at break even already, because after I did this push to the upside, our first target should have been here for TP1, but it's really small, so no, probably really no need for TP1 and all that. Again, I don't like to take like really small trades like this, because then I'm just risking money for money that's not really, worth it to me. But still, rules are rules, right? If you took this trade right here, see, that's great potential right there. Still came back, we would have been stopped out, but then, like I showed you in the other one, there's always opportunity to jump right back into the market. If we go forward, we see that we eventually break structure, right? But then you were not probably going to survive this whole swings up and down, up and down, up and down. The next thing you want to do is come to where we were, and I was trying to look for why, what we're going to do on the lower time frame, sorry, when that shock happened. As you can see, I'll take this off. We can map structure anywhere, any day, anytime. Give me anything at all. Currency pair, futures, options, anything. So that's pretty much how we do it already. And I'd like to end this video by saying thank you very much for being supportive. Thank you for the likes. Thank you for the comments. They're not coming in yet, but I know they will. And I just want to say thank you all again. Please like and subscribe so you can encourage me to keep doing this for you. I can definitely teach, maybe live stream a teaching and just do it. I'm not interested in, you know, charging people for anything, because like I say, they part of Forex, part that makes you profitable, cannot be taught. I can teach you the skills on what to do and know when to do it. But then when you're taking that trade, the fear is going to be in you and not in me. The worry is going to be in you and not in me. Everything you're going to experience and feel is going to be personal for you. And you're going to learn with, constant practice, how to, avoid some certain things, when to stay calm, when to know how to get out and everything. So, ladies and gentlemen, thank you very much for watching. Thank you so much. Please like, subscribe, and leave a comment so I can know what you like best, what you would like to know more, and just kind of put in the effort to teaching that. I'm gonna do this 100% free, trust me. All right, thank you very much. Peace out.